Hello traders, this is Fawad Razakzada, market analyst for City Index. Today is the 22nd of January. So after the relief rally, we are seeing the major currency pairs test some technically important levels. For example, the euro dollar here is testing this area right here between 104.48, call that 104.50 to 105 area. This zone had previously been resistance and support. Let's see if we will be able to break through it or whether this area will once again turn into resistance, leading to a potential drop. In terms of support levels to watch, this area right here between 103 to 103.40, this shaded blue region marks a key zone. For as long as the euro dollar now remains above this area, one could argue that the short-term path of least resistance is perhaps to the upside. But if we go back below this area, then that would signal a resumption of the downward trend. Meanwhile, if we go above 105, then the next key area of resistance or potential resistance is at 106. Then there's nothing significant until the 200-day moving average, which is some distance away from where we are at the moment. Unlike the euro dollar, the pound hasn't broken its bearish trend line, and right now it is testing a potential resistance zone around the 123.60 area, which was previously support back in the end of last year and start of this year, before it gave way on the 9th of January, and now we're retesting it from underneath. So there's the possibility we could see the cable turn lower from here and head back down to 123, possibly even 122, which are the next key short-term support levels to watch. Above 123.60, the next potential level of resistance is an obvious one, 125, which is a psychologically important level, as well as being price support and resistance. Standing in the way of the 125 handle is this trend line coming in at around 124.50, 124.70, depending on how fast or otherwise price gets there. Now for the dollar CAD, there's been some interesting price action in the last couple of days as traders have responded to initially the lack of any mention of immediate tariffs from Trump, which caused the Canadian dollar to rally to 143. And then it bounced back quite sharply to rise momentarily, at least above the highs that were created a couple of days ago. That was on the back of the announcement from Trump that 25% tariffs could be imposed on Canada's exports starting in February. So that is what caused that spike up. But then it sold off once again, and the dollar CAD fell back down to 143 area, where it once again held support. So it's kind of holding support, remaining inside what has been a very strong bullish trend. And for as long as we remain above this level on a daily closing basis, I think that would keep the bulls happy. If we were to go below 143 on a daily closing basis, then that could pave the way for a sharp drop, potentially taking us down to 142, possibly even 143, before the dollar CAD decides on its next move. In terms of resistance on the upside, 143.80-ish is an interesting level to watch. For me, the key area of resistance is the existing resistance range between 144.65 to 145, the psychologically important level. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.